Stanlib manages over 365 billion rand of assets for over 400,000 retail and institutional clients across 8 African countries. Theresa Heath, retail analyst at Stanlib, joins us now in studio to chat about investment opportunity within this sector. Theresa, thanks for your time and thanks for coming through. Let's take a helicopter view of the sector. When you look at retail, I mean, you're getting various arguments. Some people are suggesting that there is deep value within that sector, even after the hard run that we've seen over the past few months and years. And some people are saying, no, you can't find that value. And I'm happy to say Kevin here sits on the other side. But let's begin with your view of where we are in terms of that retail cycle.
I mean, I think there are pockets of value, but I think overall we can say that the retail sector is full to fairly priced. I mean, I think no one can deny that the shares have had a good run of things, and you know, I think domestic investors are butting their heads against valuations at this point, whereas our foreign competitors seem to be finding a little bit more value there than perhaps we are. Having said that, I do think that there are some specific retail picks that we continue to like and continue to hold. Yeah,
so if you take the view that there are pockets of value, perhaps before you even answer that question, let's look at this other case that has sprung up recently with the numbers that we have seen coming into the market, which have given rise to the suggestion that there perhaps might be room for the Reserve Bank to cut interest rates. What's your view on that? And if that were to happen, what would that do to the sector as an investment proposition?
Well, at Stanlib, we're currently of the view that probably rates will stay on hold after the next meeting. But if rates were to be cut, I'm not expecting a massive boost for the retail sector, because I think the reasons for the rate cuts are not really driven by an overheating consumer or a consumer that needs desperate help from an interest rate cut. I think most of the consumer help has already been dealt with interest rates, and I think the consumers are facing other pressures such as electricity, utilities, which aren't really going to be helped by a rate cut.
And the rate cut is unlikely to be substantial in any case.
Exactly.
Okay, Kevin, you sit on the other side. You're saying you are underweight the retail sector and you do not see as much value as perhaps Theresa does, or do you see the same kind of? Do you have the same kind of view?
Yeah, we just want to buy into sectors that do offer a significant amount of value, and at the moment the sector's performed extremely well. The view from foreigners is that we have excellent management teams running very well run companies. We don't argue against that. We just think that a lot of the good news is already priced in. As you mentioned, if there is another rate cut, it will increase disposable income marginally. It will mean that the cycle can continue for longer, and all of this is good news, but we just think there's a lot of good news already priced in.
Why is there this divergent view about whether there's value in retail or not? I am failing to understand why foreigners would see something that we are not seeing, because I'm imagining there must be
the
investment case fundamentals that we're looking at.
The investment case for foreigners is when they look at other emerging market economies, and the retailers in those economies, we're trading at about a 20 to 30% discount to similar retailers in those other countries. And then you can argue, well, why is that? And they would say they'd prefer to be buying South African retailers as opposed to Brazilian and so on. And we've definitely seen that in the last several years. The percentage of foreign ownership in our retail sector has increased significantly. Massmart is up above 70%.
Let me ask you this view before I ask you to Theresa as well. Is there a run view in that view from foreigners about valuation of our retail stocks?
Well, in my view, I think it's fund manager specific. Some of them choose to hedge the currency risk. Some of them prefer to go with it as well. So it really is fund manager specific.
Theresa?
Yeah, I think I'd agree with that. I mean, I think the rand does play into their considerations, but you know, I think overall they're looking at absolute levels of growth, and they haven't seemed to have been that scared off by the rand. I mean, we've seen it move quite drastically over the last 6 months, and we haven't really seen these big flows. And the view that the foreign investor sort of dips in and out of you know, our market hasn't really proven to be true. They've actually shown to be gradually increasing their stakes in our retailers overall. Some we've seen holdings reduce.
So let's talk about your stock picks. Now you have Woolies, you've got Mr. Price, you've got Hold Sport. Let's begin with the case for Woolies. We know what they're up against. We have seen the numbers that have come up. We also know what they are planning to do in the future. What, in your view, attracts investors to Woolies, and why would there still be value after the hard run that we have seen?
Well, I think the Woolies is definitely a retailer that will benefit if there is a rate cut, given that most of its customers are leveraged, and they're leveraged to secured lending,
Right.
which benefits from a rate reduction. So that will give them a little bit more legs to go. But I mean, that's certainly not what we're hinging our investment case on. Really, what we like about Woolies is their ability to run their business more efficiently. So it's not really a top line or sales led story, it's more about how they can operate the business more efficiently. And we think the management team are doing an excellent job of that. And
You like Ian more?
yeah, we think that he's doing a very good job. We think he's very hands-on, and I think we're seeing his, the benefits of his focus coming through.
Yeah, I'd agree. Woolworths is one of the stocks that we are happy to hold at these levels. We're not buying aggressively, however, but it's an extremely well-run company. We think they're well positioned to the upper end of the market, and we also think the organic foods is a stream that is appropriate for the upper end of the market as well. Their clothing division is performing well, and so this is a stock that we're quite happy to keep holding at the moment.
Yeah. Now, one of the views that I've seen in the market is the suggestion that these guys are taking market share away from Pick n Pay because of the struggles that Pick n Pay has. Is that something that will be playing in your valuation, and also when you look at Woolies?
Well, I mean, I think we like their food strategy, that the fact that they're trying to expand their range and their offer.
Yeah.
And certainly they will take market share from...
Are they beating Pick n Pay?
At this point, I think it's probably fair to say they are. But it also lends itself to making Woolies slightly more defensive than it has been in the past, because they offer a greater depth of range and value within their food offering. I'm not saying that it's a defensive food company. It's not that at all.
Yeah.
But it will be, what they're aiming to do is to stop those consumers when things get tight going back to their the former supermarket that they used to go to. They want to try and retain their customers when times are good and when times are bad.
Yeah. And I do think that's one of the criticisms that analysts have had in the past. That, Woolworths is appropriately positioned for the target market that they're trying to attract to the upper end. Shoprite is appropriately positioned for the lower LSMs, and Pick n Pay is trying to do both and perhaps not executing as well. It is a criticism that's been in the market for several years, and it is something that Pick n Pay has been trying to address as well.
Yeah. What are the risks, though, of investing in Woolies? I mean, we do know about their Australian operation, and we do know how South African companies have struggled in Australia. Woolies, no worries for you? Country Road is not an issue for you?
Well, it's not that there's no worries. I think there's my concern for the sector as a whole is that a lot of the offshore investors are taking a top-down strategy, looking at African consumer growth, and a top-down strategy can change quite quickly. And in which case, Woolworths and a number of other retailers will be affected as well should the top-down strategy change. And so there are risks to investing in Woolworths. It's why we continue to hold the stock, because we do like it, but we're not buying aggressively at these levels. And then even though I am more conservative and neutral on the sector as a whole, it's not that I think that the sector's reached a peak. I'd still expect good companies like Woolworths, Mr. Price, Shoprite to continue to grow their earnings. Some of them 8 to 15% per year, some of them as much as 20. But I just think the rating that they're receiving now is almost as good as it can get. And so what you're relying from here on forward is earnings growth, not a re-rating in the sector as a whole.
There is a fair valuation for the risk in Woolies?
Sorry, can you just repeat your
Woolies
question?
standing at fair value for you now?
Yeah, I think it is close to fair value. I mean, we certainly wouldn't be buying a lot more of it at these levels. We're comfortable to hold it. But I mean, one retailer where we do see quite a lot of value is Holdsport, and that's really the only retailer that is trading at a lower PE than what we've typically been comfortable buying the retailers on. I mean, it's trading on our numbers at about 9 times.
Right.
So that's one that we like. However, it's quite a small company, less than 2 billion market cap. So
what's the investment case there? Why are you looking at it? It's just valuation?
Well, not only that, it's a niche player. We tend to like retailers that are niche players, like Woolworths is. It plays into a certain market, and Holdsport actually plays into a very similar market to Woolies. It's the higher LSM, the sort of sports mad South African market, and leisure mad South African, and we like the strategy that they're sort of rolling out space at a measured pace. It's never going to have a large footprint, and really what they're doing is they're moving their mix of merchandise from pure retailing to a wholesale apparel business. They're increasing that emphasis, which is still small in their business, only about 4%.
Right.
But as that increases in the mix, margins will improve, and that will provide a natural sort of boost to earnings.
Yeah, that sounds like a long-term play for you.
Yeah, that's true.
It is. Kevin?
Yeah, I like cold sports. I think it's something that the market's still getting used to. It was only relisted last year after being taken off the market for a number of years by a private equity group. And the market didn't receive it very well, if I can say that, because they felt that the private equity group had taken it off the market at cheaper levels and was now trying to offload the share. But I think after a few reporting periods that they've had, the market's getting to understand the company better and get to know the management once again.
Yeah.
And with that will come a re-rating, because at the moment it is trading at a discount to the sector. It does pay a nice dividend yield, and they do seem fairly good at executing as well.
Theresa, before we let you go, we must talk about Mr. Price. The rand around 820 thereabouts now. When you look at Mr. Price and their exposure and the amount of clothing that they have to buy from overseas, would you say that they are risky at this stage, particularly given the problems that we know are in Europe and the view that we're likely to see more turmoil coming out of there and therefore have an impact on the rand?
I think Mr. Price is probably best placed to be less vulnerable to the rand moves. And if you look at its price points, obviously it imports a large amount of its product from overseas, but because its price points are so much lower, if it has to increase its price points by 5%, that could only be 5 rand. The consumer's not going to feel it as much as if a 400 rand item of goods goes up by 5%. So they do enjoy a little bit more of a benefit there because they're more priced to the lower end. And I think that management have been very good about diversifying their sourcing. So not all of their sourcing is directly linked to coming out of Asia. You know, they're being more nimble, and also making sure that they're able to spec their product to ensure that the product inflation stays at a manageable level. But having said that, you know, they're comfortable with the level of sort of, you know, mid-single digits inflation. They actually need that.